What would be the benefit for me to acquire a student loan? A lot of times people wonder because they look at, okay, if I get a student loan, I will get an increase in pay if I get my master's degree, but I will have that obligation to make that monthly payment for to repay the debt of the student loan. How big a benefit would it be? Well, in this video, I'm going to show you guys my formula that you should use to find out the true difference that a student loan acquisition will cause for you in relation to the increase in pay, the acquisition of that loan or payment, and that number, looking at how big of impact that will be on you. First, let's do a little quick screen share. And actually, what you see right here, guys, is 3 different loan amounts, right? And this actually can be used if somebody's just, initially going to school. Doesn't necessarily have to be if somebody's actually looking to go back to grad school or get that PhD. You can use this for anyone that's actually just starting school to see that. The only difference is when we actually looking at somebody that's going maybe looking to get a student loan to go back to grad school or go and get a PhD, you have some idea what their income would be. The only thing with a new student, you'll just be kind of actually guesstimating what their potential income will be for what they're going to school for. The only problem with that is they may change their major. But with this said, for explanation purpose, we'll kind of just go with the scenario: somebody that's a professional, they're looking to go to grad school and to increase their income and look at the benefit that that would be for them. Okay, but you can use it for a new student. Again, you're just kind of guesstimating what career path they're going to go on, if they're going to stay on that or not, right? What we're looking at right now are 3 different loan amounts. You see $30,000, $50,000, $100,000. I did a Google search on student loan rates, and the 4.66% is kind of like the national average for the lowest amount during that range. You have basically a 10-year term, which usually what student loans go for, and the respective monthly and annual payments for each one. For the example we're going to be using the $50,000 loan. Okay, which just say somebody's going to grad school. I think that's a fair amount to look at. Maybe a little bit less, maybe a little bit more in regards to that, but I think that's a safe amount to look at it in regards to for grad school. Even though grad schools are cheaper, but the actual loan amount may be more, because it's based on your income with that. Right here, we have some income variances right here. So let's look at these, guys. You see different actual yearly salary. You have a 40,000, 50,000, 60,000. These are the respective amounts that a person will be making for those each month. And then in this next section, I have, and this is based off information that I got from Indeed.com, that states that typically a master's degree will increase your income by 20%. So what I did a 20% increase on the incomes. You'll see those right here from 40 to 48, 50 to 60, 60 to 72,000, and the respective monthly salaries for each one of those, right? And so when you see right here, this is the increase in salary for each one, okay? So going from the actual $333 to the $4,000, we had $667, $833, and $1,000. For the example that we're going to be using to look at the variance and see the benefit of everything, we're going to be using the income of $60,000 going to $72,000, creating that $1,000 difference. So right here, when we go to our analysis section, this is what I want you guys to look at. Right here, the financial impact, they're going from $60,000 to $72,000 based off a $50,000 loan. Now, we did know that the actual, make sure we got that in there correctly with that. Yeah, make sure with that. The actual loan amount that you have is the increase in income is $1,000 for, from going from $60,000 to $72,000. That was the difference. The loan payment that you're paying is $522, which creates a monthly difference of your income of $478 and $5,736. This is very, very important. I want you guys to understand, because far too often people can look at it and say, hey, listen, if you get this actual loan, we're going to increase your income by 20%. But the problem that come up, people don't forecast and understand that, listen, the income is increased by 20%, but you still have this debt that's going to be cutting into it. This is why you want to look at this actual monthly, difference right here. Very, very important with that, because that 478, you got to decide to yourself, is the 470, and it's a you call. If the 478 going to be beneficial to you, for the amount of debt that you're going to acquire. Okay. That is a you call. This is the actual thought process you had to go through in regard to that, to say, listen, if I'm going to acquire this debt, be it make me a little bit more uncomfortable or comfortable, however it does, for the amount of money of the debt, the acquisition I'm going to have is the $478 on a monthly basis, or the $5,736. Going to be benefit, is it worth that? Because again, we actually seen that, theoretically everything went up almost 12,000. That was a $12,000 increase that it went up, right? That's, from 60,000 to 72,000. So you can look like, hey, I got a $12,000 raise, but in essence, it only went up $5,736. This is very, very important, because far too often people don't make this analysis. And again, it's an individual call to say if it's good or bad. But anytime you're looking at to acquire any kind of student loan debt, this needs to be the thought process we're doing it, not necessarily looking at the front end, the income increasing, or just avoiding the actual acquiring the debt. Look at the actual benefit with doing this. You can do, this can be applicable to, any kind of plug and play. Now, if you need any kind of assistance with actually getting any data in regards to loan amounts, you can go student loan calculator and do your plug and play to find out these amounts as far as the payments and the annual payments. Oh Lord, I got that misspelled. I apologize. Please forgive me. But to find out, with those numbers, so you can, that's very easy. Just Google student loan calculator and you can figure that out. But definitely, guys, going back to this, you need to know that number, and to make that decision. For me to acquire this debt, was the $478 going to be enough for me to go through the actual, process of acquiring this debt, going to school and stuff for doing that? And I think once you have that number in front of you, then you can make it a more of an informed decision. Okay. I hope that guy helped you out, guys. Let me see if I can get to the YouTube channel and let you guys know I am Deonte Burden, aka Mr. Short Dollar himself. The Mr. Short Dollar YouTube, we talk about personal finance, entrepreneurship, real estate investing, and business. To stay updated with more great information like the information we just went over and all other information coming down the pipe, hit that $ in the bottom right-hand corner to subscribe to the channel. And also make sure you hit the bell to get a notification each time we upload a new video. Hope this information will benefit you guys. Take care of yourself, be safe, and I'll talk with you soon.